Also today, Fed Chief Ben Bernanke is testifying on Capitol Hill, offering his outlook for the economy. Lawmakers on the Joint Economic Committee will likely question him about the strength of the recovery and the pace of job growth. Fed officials have pledged to keep interest rates at record lows for an extended period, trying to boost spending, and Wall Street will look for comments from Bernanke on whether the Fed will move away from that commitment anytime soon. The hearing this morning begins at 10 a.m. Eastern Time.
All right, Doug Flynn back with us at Flynn Zito Capital Management. So do you think that Bernanke might be moving away from what he's been saying anytime soon?
I don't think so. I think they're staying on message. They want to push through what they want to push through. But I'm really interested in hearing about what they're going to do to get the budget deficit down and the prospects for job growth. The reason why is the market is really tied into job growth. If you look at the markets leading up to when we have job growth, they outperform. And then actually, once job growth starts to kick in, the markets tend to underperform where they were.
So that's what you think is happening now that we've outperformed into a point where we started to add jobs last month fairly aggressively, 162,000. And now that leads you to believe or call a top in a market that will continue to add job growth, but stocks will have topped out?
If you look at history, it's historically that way all the time. So it's not that we've turned the corner right now, but it's just another fact that you want to look at if you're going to have any kind of a break in here off the market. And I'm not saying that that's going to be it. It might be a buying opportunity, but those are the things. People now are just coming into the market because it's run up and they're thinking, I want to get in now. And you might find some better spots soon, depending on things like that. That's another factor to take a look at. So I'm interested in those parts of the comments.
What can he say?
Well, he can talk more about the specifics and what they're doing for job growth, and we're looking for when it's actually going to turn and when you're going to have it sustainable. That's really what we're looking for, the signs that when you have sustainable job growth.
So his time frame.
Yeah, and the other thing with Bernanke is he might be, I don't know that the incentive is not there for him to talk up or talk down the economy, because even if all the signs point to a stronger economy, Bernanke, if he wants to keep interest rates pretty low, can't go out there and say, oh, things are great, because then they're going to say, all right, then why don't you raise interest rates?
Right, and whether or not the Fed's going to be proactive in raising rates early remains to be seen. We're concerned about that, too.
One final question here. We've seen the Fed stop buying mortgage-backed securities. We have seen mortgage rates in the latest week move higher. Do you think they'll change their path on that, or do you think they're going to stick to this plan that they had to stop that stimulus effort end of March and not revisit it?
I think that's the end of the quantitative easing, is they stop that purchasing. So those things are falling off, and you'll have the end of quantitative easing. And then the next thing you have is the situation where they talk about no longer saying extended period of time that they're going to keep interest rates low.
But you tell clients to come in, buy a house now because rates are only going higher. Mortgage rates are going higher.
Yeah, I think that mortgage rates are definitely going higher, and most markets are flatlined in terms of where their housing markets are. So that's an opportunity that it's going to cost you a lot more when rates go up, even if the house values don't move and they just flatline. So if you see a house, it's right at the end of the cycle there in terms of breaking.
You in the market? Is that?
Yeah, no, not at all. Are you kidding me? I barely afford my own house as it is now. Thank you, Doug. Appreciate that. All right, Ashley, back over to you now in London.